Good morning, everyone. Welcome to today's weekly updates of our trades, Dxy US dollar index, Euro dollar, NZD USD, and gold. I may touch on USD JPY, but I would like to spend more time on gold today. Yes. What did we see last week? If you had been holding your trade right from top here or up here, you will still be in the trade. But most of the time, our challenge is we don't want to leave our trade for too long. But again, over time, you understand how to not lose out and miss major movement when the trend is unfolding. And when you are able to put in the second position, the third position, we'll learn all of this. When market corrects at times, there is a blueprint, the market blueprint that it gives us in form of APC when it's a correction, when a structure, is finished. But at times, the market may not exactly give us a perfect blueprint that is expected. And so they shock us. That was what we experienced last week in the correction of DXY. The DXY structure, the US dollar index, they are similar, but in terms of the depth of the correction, it's different. And so the DXY, was quite deceptive for many. When you thought that, okay, it's still going to correct a bit upwards for you to pick your order, then most traders are shortchanged. But the good part of it is that we are right about the direction. But what we couldn't execute is the point of entry to actually execute our long trade. Now, again, the lesson that you're going to draw from what happened last week also is that the danger of trying to counter trade, and if you are counter trading, you have to be very strict in the choice of your stop losses so that you are not just drawn into unnecessary negative. Because you might think that over time, trade might still want to come back to test an area of liquidity or imbalance in the market, which you may not find. Now, if you look at what an imbalance is a vacuum that is left or created by the market wave or structure that you think can be reclaimed before the market resume its normal course. For instance, we had this move. This came down. When this came down from here, it created an imbalance above which price went back to claim to leave this gap. Then market began to print down. An imbalance is created here, which is an area of liquidity. It went up, it didn't come up to this point. It came further down here to create another imbalance. So when market got here, you will think that this area up here is a vacuum that market may still come back to claim. But how it's going to claim it is what you don't know. And when you now begin to pay attention to the structure that is building, you may know the area that the market eventually will come to claim before, it continues in its course. So market did all of this to finish a particular cycle here, then a reclaim of an A, B, and a C around this area. So this C went as far as claiming all the imbalance or liquidity above here and got here, and there's a vacuum that it could not. So according to structure, the structure is completed in terms of the VIB, FIB retracement, and market went bearish again to continue to print another cycle. Now, in printing another cycle, this also came down in 5-wave structure format, which we saw recently, and we were expecting, because a vacuum again is created around this area. So we expect that this is going to go up as another structure to claim at least maybe up to this area or this area of imbalance, if not deeper, for us to come to the downside. But what has price done? Price felt like I've grabbed like liquidity around this area. I've tried to knock as much as imbalance I could do around this area. This imbalance is none of my business. And price came down. So the arm here, the C arm is quite short. The C arm is short. And unfortunately, with the impulsive nature of the first arm and the ABC of the correction, we expect at least we're going to have a good impulse to retrace 100%. We didn't have that. So, and that is why, when you are correcting and you are, because correction is like counter trading, you have to be very careful because market can do anything. And in a very impulsive nature of the market to go to wave 3, and that's where you see that there's going to be a shocker. So, and what we are seeing now, this has broken this low, and this is a new trend. All you can have now is for us to correct to the upside. You don't want to sell DXY from here. Wait, just wait for it. Don't want to sell from here. Wait for it and allow market to come without taking this top. It's going to come and you're going to get your chance to sell. So that is what we can see. This never did 58 retracement. It was short. It was very short. Almost at 58, it was very short. And that's a shock in the market. Now, looking at the US dollar index, which probably similar in pattern to DXY, but the US dollar index did reclaim at least 50. It went past 50, it never did 61.8. So, and now we are seeing here on DXY, it has broken low, but yet to break low here. But that tells me that the price also is bearish. Now, we are now seeing a situation of a creation of a new structure in progress of a 1 and a 2. And this may just be the first part of the 3, and we need a 3-2 now to go more down without breaking this top here. So that is what we are expecting. So, but from now, you should not sell until we see a correction. So, and in that correction also, they might correct in a typical framework that we know as an ABC, and they might correct sharp. But when you see a sharp movement to the upside, it doesn't mean that they're going to take this top. You must know all of that. So with the structure is building, and dollar obviously is losing its mojo, and the price is coming down. So this may not be done, but we should not chase to sell it. This is for our chart. Now let's go to euro dollar. I'm going to take a moment also here on euro dollar. So what did we see on euro dollar? Euro dollar structure of this corrective format is completely different. It's completely different. It did an ABC of X, of a zigzag, an ABC here, gave us this that looks like an X, and also did an ABC to the downside, but it never, got to, 100% extension. And that's, why at times it's very difficult to chase or to counter trade, like I said, counter trade. So the structure is kind of messy here. It's kind of messy. You couldn't even call this a flat here. you can't call it a flat here. It looks more like a zigzag of a W, X, and a Y. And so when you are expecting that at least this should get to 100, it didn't. In fact, it didn't even get to a 61.8 of the whole move to the upside here. And we add this sharp movement. So with this sharp movement, if you think they are fooling you and that they are coming to take this low, you're on your own. But at the same time, I won't buy from here. I need a 2. So the way DXY and US dollar index had formed, they had formed, let me show you now. They had formed an A, B, and a C here. So the first move to the downside here is a 1, and this is a 2. So we're likely to see a 3-1, a 3-2, and a further downside, further momentum to the downside. That's what they're seeing. We had seen a 1 and a 2, and probably we are seeing a 3-1, a 3-2 to the upside for us to pick for that drop. But on euro dollar, that's why I want to take a moment for you to see this structure very well. On euro dollar, what we are seeing, is not giving us what looks like a 1 and a 2 right here. So on this 4-hour time frame, it's just like a single sharp movement to the upside. This shows that euro is very, very strong. You would have thought that, okay, all this while euro had been so weak, and what we are seeing from euro, it is a very strong move from the two, maybe the Olympic also has contributed to this unusual strength that we are seeing from the euro. France is in Europe, so Olympic may have contributed to the fact that dollar could not even push deeper here. So it going inside of a 1 hour on this time frame. So what can we see? I want to break it down more a bit and bring out my drawings for you to know how to navigate in counting waves. So you can't be like a robot that you want to count waves, so you may miss it. Always recalibrate. So that's all you can do. So it's almost gotten to a 61.8. This is a 61.8. It never got there, just a bit shy. And we thought this is a Y, and this is a W, an X, and a Y. But here, this actually went into an ending phase. So we add the first movement to the downside. Of course, you don't expect that this will be a 4. A 4 cannot come and break a 2. So, it was kind of a messy structure. Because you would have thought this is the first wave, the second wave, and we are going more down. So see what they did. They just gave us an ending structure of ABC, because an ending structure will always be a 3-wave. So 3 waves. So we saw an ABC of 1, then ABC of 2 to break this. So this is a 2. Of course, nobody could have thought of that. So we probably will be thinking that, oh, it's a 1 and ABC, to give an extended flat, and we are going further down, at least to pull close to 76.8. So that's what you should have, anybody would think about. So it didn't do that. So, and of course, this will not be a 4, because it's like a 3, an ending diagonal. It's a 3 that you see in with 2, 1, 2, 3, that means 1, 2, 1, ABC of 1, ABC of 2, ABC of 3. So the last 3 you can see. Then inside of here, this is the correction here. This is a 4, and this is a 5 here. So if I go more to the 15 minutes time frame, it's nothing but wickedness. So this is a 2, and this is like ABC of a 3, and this is ABC of a 4, and this is ABC of a 5 to finish this. But this is the fifth wave is rather more truncated here. So, and again, if you don't know it's the fifth wave, if you try to look at the fifth, retracement between here, if you're thinking that this is the first wave of this move, no. So looking at this couldn't have giving us an a 1 and a 2 and a 3. No. So it's an ABC that we saw here for a 4, and the retracement is quite below, below 90 self, a bit below 90. So, but in times to, attempt to look at this new move to the upside from here, immediately we did this. So this rightly clicks, a 1 and a 2 at about 76 or thereabout, retracement of the downside. So this is a 1, a 2. Probably we are seeing 3, and now this 4 is what we're not sure if it has ended. So if it has ended, it should break low and break this low. Then we know that we need to take at least 1.08735 to the downside before we know we are correcting, and we'll be looking for a buy order. Now, these may still go up. It may still be a 4. If we don't have a 4 here, if you don't have a 4 here, if this 3 does not come here to recalibrate, this 3 may come here, 4 may come here, 5 may just stall here. But this may still be correcting 4 on that much bigger time frame, looking at the extent of the wave 2 in this area. So this may still be correcting the wave 4. So if it breaks down, then go back up, that is very, very possible. But if we take up this 1.09250 to the upside, then we are finishing up with wave 5 to turn to the downside. So that is what we should be expecting. But if we turn down from here and we continue to go down and break this, then we are finished with 5. Maybe this is a 4 and a 5 here. So we're going to recalibrate, but don't chase this market. Don't chase it. All you are looking for now, it's a correction. It may go up a bit to break the top before coming down, but don't chase it. It's almost gone. So all we can do is to at least look for, once it's done to the upside, you can at least look for at least a 61.8 retracement. But again, you can get a shocker in a very bullish market. So the way the price corrects to the downside, that's the first shot of it, is what you must look at and see what nature or what kind of correction is giving you. But a 61.8 would not be a good, would not be a bad place to enter into a long again on Eurodollar. So let's look at gold. So going to gold, like I said, I'm going to spend a bit more time here on gold. Yeah, you may think that we've lost some move. Yeah, fine. We've lost a decent move. We are taught, like I told us in one of the video, if it did this, it could have finished this as a single correction and continue to move on from here. So the format you got here is similar to what we are getting here. But what did they do? They pushed the price down. So it's very difficult at times, when you want. The only thing is that if you're not counter trading, then if you are drawn unnoticed, in the negative, the price will still push in your direction. But when you are counter trading and you think you want to hold a sell from this level, you want to hold a sell and you expect that, okay, it will be an ABC of a W, still go more than to at least correct the whole of this movement to the downside, you are in for a shocker. This is not coming here to take this low again. Like I said again in another video, we may see this go up, correct, break the bottom. But if it did break the bottom, if it breaks the bottom, we're going to go up again. But again, I said it will continue to crawl from here. And when we got here, I said, be careful. Don't try to chase this market. Wait for this thing to come down for us to pick a buy. Now, what is happening here? So that is one thing I want us to see. Now, this is a new impulse. When you see big move on, like, let's look at the daily here. A spike of movement that is not in line with a particular trend does not make any sense. Now, this is a big spike here, a big move on a daily here. And you may have read this move oh, as an end of a trend to go down. Do you understand? To go down, you may even be tempted to think that these had gone down like, oh, this is the first wave, and that this is a 2, and that you are coming down because of this price action here. You are in for a kill. You are in for a kill when you think that way. You must be thinking on the larger time frame, what exactly has price been doing, that we've just had a 4, and that the fourth wave had finished around this area, probably, we had probably a 3-3 here, a 3-4 here, and a 5 here. And after this 5, we add this big move here. So this big move also is like a price action that is similar to this one, that you would have thought that, okay, this is a 1, a 2, and that you are going further down. Price didn't do that because price is never done with the structure, and price now went up again to print a new 1, and that this is a new 2 here. But a new 2, you were expecting a new 2 to at least touch, if it's going to be much of a bigger correction, to touch at least 61.8. They never did. It never touched 61.8. Gold never touched 61.8. So let me go back to 4-hour time frame, because I need to let you see the deception that comes with big spike. So this big spike does not mean anything. So if you think that, yes, if it's going to correct the whole of this, because what I can see here unfolding is, of course, we did see 1, 2, 3, 4, 5 nature here, and A, B, C. Then in here, you cannot see the C leg and count a 1, 2, 3, 4, 5 properly. Probably if you now break it down to the lower time frame, you might be able to see the 1, 2, 3, 4, 5 nature of this particular wave, but it's shrunken, it's truncated, badly truncated, that it didn't even extend close to 0.76 before, And I will tell you one of the things that, made this like this, because when the price went up here to do a 1, it did an ABC of a 2 here. So this is a 2, another push to the upside. So the price made sure that it didn't break. It considered this as a primary 2, and it didn't see the low of it. It came close to it. It didn't so. So when you are looking at a primary 2 of a wave and there's a correction, that primary 2 price may not see this movement from here and correct this movement as an ABC of like within a 2 to this one. It is regarding this a 2 to the move from here to the upside. You must know that. And you will see that also with NZD USD, because we'll still get there. So we are learning every day. So you would have thought that, okay, a move of a 1 and a 2 had been completed here, and another series had been completed here. So, but price now saw that, oh, he's going to correct the whole of here to here with this. Not that price is correcting from here to this point with this. So, and that is why, even in its correction, it made sure that it didn't break this primary 2, because this area is now considered as the primary 2. We were thinking of this also area here, because price is a 1, 2, a 1, 2 before going up. So a 1, 2, a 1, 2 before going up. And this, it didn't come down to do a 1, 2 with this, but it came down to correct the whole extent without breaking this primary 2 here. Now, what are we seeing here again? We are seeing a 1, 2, a 3, 4, 5. Now, within these 3, the third wave here and the fourth wave here, this actually reacted to the downside at exactly 161.8 of an extension of 3 to 4 to the upside. Exactly. So you can go and backtest that. It is 161.8 extension, and we saw a sharp drop. You may be thinking, it's going to go up, take the top before you see reactions. But 161.8 was completed and a sharp drop like this. Now, with this sharp drop, what next? Do you think that this sharp drop, it's really an engulfing candle? It's a big price action that the price is going to go up again, break down? No, I didn't say that. And I'm so sure of that. You know, in the movement, in recovery of this price of this wave or structure to the upside, price had done more than, you know, 76. And that also was the first thing that told me, or that gave me, you know, a clue that this is done. This is developing into a new wave. This move is to confuse you. This move to the downside is to confuse you. So you must know that. So it has come to break the primary fall here. So which means that the move is corrective. It can be highly impulsive. You know, the way this one came down as an high impulse, this one correcting to the upside may be something similar here. We may have the third leg or not. That is one thing I want to say here. We may have an A, B, C or not. This may just continue to crawl to the upside from here without coming low again. Now, a 192, a 61.8, maybe around this area for us to have a fall and to also do a 61.8 from here to finish this wave. This is a cycle. This cycle is completed, and in its corrective format, this also may have finished the correction, because from here to here, these had broken, you know, 50 retracement, but it didn't get to 61.8, and it doesn't have to get to 61.8. And that's why they shock anybody. They can shock you. What you don't want to do is to pick a sell and counter trade. It's better for you to look for where to pick a buy and continue to buy. And if price now want to do a proper blueprint of an ABC to the downside, once you have, you know, that C leg, it's a bonus for you to ride to the upside. This is going to take the top again and print higher. That is what I can see. So the 1 hour time frame, may suggest that this pin bar may attract price again to break the low before it goes up. But it is not, it doesn't have to happen. Price may continue to sprint to the upside from here. Maybe at the opening of the market, I may just want to, you know, look for a small lot size to buy, because price may never come down. It may just continue to go up. It doesn't have to behave like, even when at this point on Friday, was it Friday or so? Yes, because the NFP were thinking that it was going to complete the last leg of DXY, of wave C of DXY, as well as US dollar index to the upside, and that may give a small strength to the dollar. They shocked everybody. And when dollar was falling and euro dollar, every other things were going up, that was when gold chose to fall. So it is not about the news alone, it's about the structure. That's what I'm trying to say now. So because you look at the news, you look at the structure. So, and of course, on the DXY, they had done a part of the C, and they felt, yes, we want to shock everybody because the trend is towards the downside for now, for dollar to lose. So we don't have to strengthen the dollar, and you know, and the structure just caved in, and you know, it went in the direction of the higher time frame structure. So that was what we saw. So this, I want to look for a buy with small lot size, and if it comes down, opportunity to load in a bigger lot. But don't think that this is the beginning of an impulse and that the price will go up, come down, and continue to, no. This is an ABC format. So what can we see on gold? Now, looking at gold, you may want to think, because that means you are boxed with your knowledge. When you are boxed with your knowledge, you may think this is an A, B, and probably a C around this area. And by the time you say, oh, a C around this area, this is a 1, 2, 3, this is the price will continue to sprint up and it will not come down. It will not come down. So this may suggest, this pin bar may suggest that liquidity may still be reclaimed. This is a 50 here. This is a 61.8. The liquidity, if it comes down around this area, good, I will pick. But for now, we have missed an entry around this area. We have missed an entry. So, and this may not come back again. So, looking at what we get here, this is like a 1 and a 2 here, and we're going to see probably a 3. Once price breaks this area, this is a 50, and this is a 61.8. A breakout of 61.8, price will just continue to go up. If you're not careful, how many pips are you going to lose here? From this top down to 61.8, it's about 260 pips. Before you realize it, price would have gone up. So I'm not sure if price is still going to correct. I will expect price to correct. If price correct, price might just be correcting this and not this. So you are going to decide on your own how you want to progress, because this is enough to have corrected the whole move to the upside. That's what I'm trying to say now. It's enough to have corrected the whole move to the upside. That's why I'm taking more time here. So this is the 1, 2, 3, 4, 5, and this is the inner structure of the leading diagonal here of a 1 and a 2, a 3, a 4, and a 5, a leading diagonal, and we are seeing this sharp movement to the downside. So if you think you're going to have an ABC, it's just a projection. It might not happen. It might not happen. So you have to look at the alternative. So if you go inside of a 15 minutes time frame, these had gone up. The A leg has gone up as a zigzag of A, B, C. Is a zigzag, and it's almost 100 extension, or a bit just slightly above 100 extension if you look at this zigzag. So this is a 5 wave here of an A, a 3 wave down, and a 5 wave to the upside. Then we have this flat to the downside here. We had this flat to the downside here as an ABC of a B. Now, what we are considering as a C leg of an ABC to the upside here, we expect it at least to develop into a motive, at least. But the way it has gone up to tick this area, almost getting to 50, it's an aura of an impulsive nature that is going to go up. It's an aura of an impulsive nature because it has broken this. The best I want to see is if it corrects deeper, I won't mind. I will take my chances to probably to go long from this area. Then if it corrects deeper at this area, I will take my chances again without taking this low and this low. I will take my chances again with another small lot size. Then if it now go and pulls and correct much more lower, then that's when I want to look for a big lot size to ride up. Now, like I said, the impulsive nature of this third leg that we consider a third leg may go up to continue to go up. It's quite impulsive. If this is 15 minutes time frame, I had not seen the only thing is that I don't see I'm not seeing a 2. I'm not seeing a 2 here. Let's look at 5 minutes time frame. Okay, so maybe, yeah, okay, yeah, maybe from here, like I said, these are giving us a zigzag A, B, C, and this is another A, B, C of a B. Now, from here, maybe we can say an A, B, C of a 2 already of this new move to the upside. So this might be the third wave. And now, the only thing here, if this is going to develop as a third wave, probably we might see a correction of the third wave of this. If it completes itself, we might see this as a 1 and a 2 and a 3 here, probably the 5th wave, and the 4th and the 5th wave may be going up around this area to finish this as the 3-1, and we look for a 3-2 to buy. That is the only thing you may be looking at here now. If I go inside of a 1 minute time frame, I want you to see it clearly. We're just looking for opportunity, 1 minute time frame of the old movement now. So of the old movement, not this one now, because these may just have gone, came down in a flash like this and never do a second leg to correct. So, but if you're going to have a C leg to correct, this will react before 76, before this area, it will react and come down again before price will not break 24.62. If you're going to have a C leg, we should see a reaction, a break of the fourth wave to the downside, and we go up if it breaks down from there. But for now, it may be crawling up. If this takes 61.8, I doubt if it's going to come down again. If it takes this area of 24.52, I doubt if the price wants to come down again. So we need to see what is building up here. If this comes down before taking this area, if it reacts on this area and begins to go down, then we're going to have a bigger ABC. But if it reacts before getting here and come down to correct the old movement here, it might be going up to take the top. So we may still have a slight option of trading a pullback of a wave 2 of 3 here to go up. So what am I seeing here now? This is a 1, and ABC has completed here. So this is a new move here on the 1 minute time frame. So this also is riding up on a 1 minute time frame to finish up a broccoli. So maybe an ABC of 1. This may be going up as, if a 3 may have completed here on the 4 of a 3. So we might be seeing this as the last wave here. This might just be a 4 here, because this is like an ABC here. So this might just be a bigger 4 here to have finished the third wave here. This might be a bigger 4 here, and this may just be going up as the last wave of ABC. Sorry, a fifth wave here for a deeper correction of on that time frame of this old movement to at least a 61.8. That is what I can see here now. So in that case, if it's going to work like that, we may be seeing a reaction right from here on that time frame. We may be seeing a reaction at a 50. We may be seeing a reaction at a 50. So if we get a reaction at a 50, we are almost there. You may suspend your buying from here, but if it breaks out of here, look for a retest immediately on this 50 to buy. So if you react around this area to break this low here and take the low of A, then the best will be to look for a correction of this wave here without taking this bottom. So that will be the best to look for. And with that, price will go up again. So that's what I can see on gold. So this is almost completing for me as a new wave of a 3-1. Then we can look for a 3-2. But if it breaks above here, just look for your buy, because it may just continue to go up with a small lot. And if you now continue to come down and take this low, good for you. That is what I can see. I think with that, I may have given you a good one on gold. Now let's look at NZD USD. So I'm taking my time so that we can recover the opportunities that we lose or that we lost last week. It was quite, NZD USD. I gave us an advice. I said at 76.8, if you can hold, it won't break a level, and the price didn't break it. So this is an example of a very wicked thing that price may do. Let me quickly give you a daily time frame structure. The daily time frame structure of NZD USD, like we said, that a new move of A was here, a 5 wave, an A, B, and a C of wave 2. So this one became a primary to this wave. And that, in trying to correct now, so the correction, of course, didn't take this primary 2 here, almost breaking it. It didn't take it, almost breaking it. And now this is developing into a bigger, it was crawling, and it has shown you crawling to the upside at a price action of a bullish reversal to the upside. So this is going to come down if you have not taken, a buy yet. But if you have been holding, good for you. So if you're not taking a buy, we are looking at the retest around this area of 59,100. Price may come there or not, because this may be big for a price, that's a daily support area, 0.5900. Price may come there, but you are going to look for the nature of correction. Let's see on a 4-hour time frame. So what price may do on a 4-hour time frame. If you look on the 4-hour time frame, it's very, very, very messy. You don't really have an engulfing candle to work on as if. So it's still an area here of this break of, the fourth wave around of this particular move. So we are going to look at what has happened here also. This completed a wave 3, and this is a 4 here at this level, which price are taking now. Then we add a 1, a 2 around this area. Then we add a 3, probably a 4 around this area. Then we finish a 5. So we are broken this as a 4. Price went up to break this as a 4. Price is coming down to retest this area of a break. So I believe that 5,900 area will be a good support area zone for price to come to. That's what I'm seeing here. So if we go on a 1-hour time frame for much more deep analysis, because after that correction, price is going to give you an explosive movement to the upside. So on this time frame now, what can we see? Price is not coming to take here. So on this time frame, this became the primary 2 here. 58,700 became a primary 2. So this zone, this support zone, is where I don't expect price to break. We said we should be looking for this an area of 5,900, to get a buy. And that would also, align with a 61.8 retracement of the movement from down to this point. So it aligns with the 61.8. It's a strong area. 5,900 is a strong area for you to pick a buy. But of course, price may still go a bit more down, depending on the structure. Is it going to give us a blueprint of an ABC, or they will shock us? So price may shock you. So we've had a 1 and a 2, probably a 1 ABC, is a 2. Then we have a 3. We had a 3 here, probably a 3, 4 of a 3, and 5 of a 3 here. So after 5 of a 3, price gave us a 4, the 4th wave, a bigger 4 here, and finish up. It's finishing this area as the 5th wave in the yellow. So as it finished, that's another thing that we need to look at. It may have finished once we take the low of here of the wave 2 here. This is a wave 1, this is a wave 2. This may be a 4 around this area and a 5. So if this one corrects to the downside, it might be a new correction once we take this low. Let me put something there, a yellow line there. So once we take this support of 5,900 to the downside, then we are correcting an ABC to the downside. So a break of 59,300 is just a confirmation. But once you take 59,400 to the downside, we are already correcting. So you should be looking for. So it's looking like we are correcting This is a very big move, a sharp wave of 1, a 2, and a sharp wave of 3 here, a movement and a 5. This is sharp here. So I believe that probably this is not breaking the top again. It's correcting an ABC. And this is an area, a strong magnet, a 5900 for you to look for your buy in case you. So, but if you look for your buy here, it's a perfect place to look for your buy. Of course, we may still grab some liquidity below here without taking 58,700 to the downside. Now, USDJPY. USDJPY daily time frame. Yeah, we have missed the move, but though we have missed the move, we will still get opportunity to trade it. So this is falling like a knife. Like we did say that we had, when we were going up to finish up this move, we said we had a 1, an ABC of a 2, and this is the third wave. This is probably the fourth. And okay, no, it was this with 3, with 4 here. Yeah, it was at this point. So when we had ABC of a wave 4, and we have said this is a 1, ABC of a 2, and that this is like going to give us wave 3, a wave 4, wave 5 to push up. But I think they manipulated the thing around this area, and that they are now coming down. So they had broken these 2 here. So there's nothing that anybody is looking for again. They had broken these 2, and they are here right now. So, but don't sell it from here. Don't sell it from here. This is still going to go up. So let's wait for the kind of correction that is going to go up. It's going to correct to the upside. It's just falling like a sharp knife. So if you go up to the upside, we make. I don't want to buy either. I don't want to buy either. I will just be looking for the end of that correction to look for a sell C of probably, if it's going to be a bigger ABC, then we're going to sell C to the downside. So that's what we are going to look for on USDJPY. So with that, I want to wish you a happy trading week. Bye.